We mentioned gold earlier, and as you know, these central banks are having trouble around the world and economies are having difficulty around the world. Of course, gold is responding because gold is pure price signal in a global economy. And it always comes back to gold. We never went off a gold standard. Central banks always settle in gold, has been doing that for decades. And now that they look like we're heading to a Bretton Woods 2.0, where everyone has to get together and reconfigure the global matrix of trade again, they're going to feature gold. That's how they'll start. But they probably will start with gold and end with Bitcoin. You know, I remember people saying, well, World War I started on horseback and ended with airplanes. World War II started with airplanes and ended with atomic bombs, right? World War, trade war, World War Bitcoin of the 21st century will start with gold and it'll end with Bitcoin.
The global financial system is crumbling before our eyes. Central banks are in panic mode, currencies are imploding, and the economic foundations we once took for granted are turning to quicksand. In this chaos, one ancient asset stands unshaken: gold. The ultimate truth teller in a world of financial lies, gold is flashing warning signs that the fiat empire's days are numbered. Now here's the twist: gold is just the opening act. Max Keiser nailed it. This monetary revolution starts with gold, but ends with Bitcoin. Think about history's greatest shifts. World War I went from horse charges to dogfights in the sky. World War II jumped from bombers to nuclear fire in a blink. Today's financial war? It'll begin with central banks desperately clutching their gold reserves, only to get steamrolled by Bitcoin's digital revolution. The script is written. The collapse of the old system is accelerating the rise of the new. Gold will be the bridge, but Bitcoin is the destination. The question isn't if the system resets, it's when. And when it does, will you be stuck in the past or riding the wave of the future? The clock is ticking. The greatest wealth transfer in history is underway. Which side will you be on when the dust settles? Let's watch clips from Max Keiser's explosive interview to gain more insight. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
They definitely have a commitment to Bitcoin, and elements within his government are very committed to Bitcoin, like Cynthia Lummis and maybe Ted Cruz and Matt Gaetz maybe. But of course, there are other competing elements, and he launched his own coin, which predictably did not do well. And so there's a lot of cross currents going on there. And so I always say there's 5 stages of Bitcoin awareness. The first stage is, wow, I just discovered Bitcoin. Here's how you fix it. 2 is, oh, I love Bitcoin. Take my shitcoin. 3 is Bitcoin is a medium of exchange. 4 is Bitcoin is a store of value. And 5 is Bitcoin, hyper-Bitcoinization. So everyone kind of falls into one of those 5 categories. So Trump is kind of in stage 2, where it's like, I love Bitcoin, take my shitcoin, right? So he's on stage 2 of 5, and hopefully he'll get, further down the road. Also, the states, a lot of states are doing really well. I think there's 9 states where they're putting Bitcoin on the state's balance sheet. So in the United States, you see this often, whether it's the marijuana, medicinal marijuana started off as a states' rights issue, is kind of working its way up to a federal level. So the states have the power to create federal policy over time as well. So there's a lot of activity on the states. Left-wing policies tend to be run on government programs that are funded by printing money. So if you have money that's outside of their control, they cannot fund these government programs, and therefore they lose power. And it's come out, I think we can say with a lot of assurity that a lot of the things going on with the Democrats in terms of just sending out checks, buying votes, and buying programs, it's all with printed money. So once you take away the money printer, you can't do any of that stuff. So I can understand why they would be fearful of Bitcoin. Yeah, there's always a classic divide between the free market on the right and the state-run government models on the left. And the state-run government models, they love issuing papers and issuing theoretical academic studies, and they love Keynesianism, and they come out of the university system where they're academics, and then they transition to government studying economic academia, and they have theories about what's fair and what is equitable, and then they use the power of the state to impose these theories. And of course, that never works. It never has worked ever in the history of the world, that governance model such as that. And it always ends up going back to market-driven economies. Bitcoin is a movable feast, right? And you can memorize your seed phrase and go anywhere you want in the world. So if the conditions change in the United States, then Bitcoiners can leave and go somewhere else. And it's an open market. It's a free market. It's the first time you've separated money from state. That's never, ever happened before in the history of humans. And that means that you've got a monopsony, which is power of the consumer, essentially. So it goes from a monopoly power to a monopsony power, where it's a boycott. For example, a boycott is a monopsony. The boycotters are forcing change on a company by not buying the product. That's called a monopsony. With Bitcoin, you have a monopsony of money. The Bitcoiners and the private keys can simply leave and go somewhere else and do what they want. So I think the state, and I say the following, and I've said this for a long time now: money existed before the state. Bitcoin separates money from state. Bitcoin kills the state. So I think the state, along with the central bank model, is fading into history. I believe, if I'm not wrong, that during Jimmy Carter administration, going back to the 70s, I believe he started the FHA, the Federal Housing Authority. And the idea was, well, we're going to subsidize housing. And of course, that jacked up prices and made it unaffordable. So the solution was, again, free money. Same thing with student loans and Sallie Mae. Okay, we're going to subsidize student loans. We're going to subsidize, and it just jacked up prices and made Ivy League education unaffordable. Then under Clinton, I believe, is when they started the liar loans. So they went all these financial institutions who said, well, we'll lend money for mortgages to anybody. Just, again, free printing, money printing. Then, of course, they all got bailed out, which was more money printing, right? So there's never been an attempt to solve a problem without printing more money. That's pretty much the history since 1971, when Nixon, closed the gold window. That's what we've had. That's the only solution that's always been up. Now, we live in an interesting period now with Trump. He's come up with something new. He's using the tariff solution, right? They're just not going to blatantly print money. That's his idea, is tariffs. But I have a feeling that before long, it'll go right back to money printing. The 2008 crisis. So here's the thing about it, it comes up all the time, is that the number eventually that they chose, remember they were in Congress testifying, and Timothy Geithner was saying, we need $800 billion from you guys to bail out the situation. And Congress said, well, you got to come back to us with something more than just a slip of paper. Like, we need some analysis on this. And then the stock market crashed the next day, and Congress said, okay, we give in. We'll give you the money. And they wrote them this big fat check for $800 billion for all these lending facilities like TARP and others. And we added it all up. It worked out to some multi-trillion-dollar number that the federal government printed up. And here's the amazing thing about it, is that Obama, who was transitioning to become president at that time, could have very easily done something that historically would have been the norm. He could have taken that same amount of money that eventually was printed to bail out the situation and made every mortgage in America whole and every credit card debt in America whole. So everyone with a mortgage would be whole, everyone with a credit card debt would be whole, and we would start the economy all over again with everyone having been fully paid off.
And banks would not have had mortgages on their books that were underwater. That's the key.
But instead, he took that same amount of money and he gave it to the banks to make them whole. He bailed out the creditors and not the debtors, even though the creditors made those loans on the basis that they were accepting the risk of making those loans. And so he bailed out the creditors. And that historically never, ever happens. If you go back even to the Bible, they have the debt jubilee, right? The debtors get bailed out, not the creditors. The creditors are taking the risk to begin with. And if they lose money, then they understand that from day one. But their decision was made to bail out the creditors. So the creditors got to be made whole. And what did they do? They did the exact same thing from 2008 to recently, where they just ratcheted up the leverage in the economy to 10 times greater than it was in 2008. And now we have the global financial crisis that we do now. It had the seeds in 2008 and the failure to bail out the debtors in favor of bailing out the creditors, a pure gift to Wall Street thanks to the Obama administration.
Trump's curious about crypto, but stuck in a love Bitcoin launch junk coins loop, while true leaders like Lummis and Cruz are driving real adoption. 9 states are already stacking sats, proving that meaningful change always starts locally. The old financial system, built on endless money printing for bailouts, stimulus checks, and political favors, is being exposed. Remember 2008? Banks pocketed trillions, while everyday Americans sank deeper into debt. Now, a new force is breaking the cycle by separating money from state control and ending the stranglehold of fiat. The era of government-printed money is coming to an end. The revolution is already underway. Join it or be left behind. At the same time, the IMF wrings its hands over Bitcoin's so-called instability, even as America steadily moves toward adoption. Pure irony. Forget chasing price charts. The real story lies in Bitcoin's unstoppable hash rate growth and absolute scarcity. We are living through a historic shift, collapsing fiat empires giving way to hard-capped digital gold that is rewriting the foundation of global finance. Early believers saw it coming. Some soared, others crumbled under the pressure. Now we sprint toward a future where value moves at the speed of thought. According to Max Keiser, the monetary reset isn't on the horizon. It's already here. Adapt, or watch history leave you behind. Let's watch more clips from the interview.
For me, what's even more laughable is that the IMF talks about how Bitcoin is destabilizing economies, and they're concerned. And yet, Donald Trump in America, which is 16 or 17% of the IMF, is adding Bitcoin to add stability against the fiat money in the central banks. So there's a huge disconnect with these two institutions. And when that resolves itself, I'm 100% certain I know who the loser will be. It'll be the IMF. So this is the IMF's last hurrah. They've been around a while. This post-World War II, creation, that was part of the reorganization with the World Bank and these other folks. And they're all being washed away. And that's another 5 years from now, they'll be gone. And El Salvador will be incredibly richer as a result of stacking sats. There's no collective wisdom when it comes to finance.
No.
Right? As P.T. Barnum said, there's a sucker born every minute. The half-life for financial stupidity is 4 years. Right? Every 4 years, there's a new generation that gets their clock cleaned. And it's been that way for 1,000 years, and it's never going to change. The price chart, as I often say, is only one chart, and it's not really the most interesting chart. So I'll give you 2 other charts to look at. One would be the 200-week moving average, which you see it's a 45-degree angle, pointed up, hasn't changed in 15
Almost
years.
Constantly, yes.
Right? Mm-hmm. And the other one would be the hash rate, which is just screaming to new all-time highs all the time. And that's the true power where the true conviction is. ETF holders are not don't have a lot of conviction. They'll buy and sell ETFs every 3 months, 4 months. Their brokers call them up and say, dump your Bitcoin ETF and buy this other ETF. And they're just trading. They don't even know what Bitcoin is, and they have no conviction in Bitcoin at all. They're just trading stuff. The real conviction with Bitcoin is with the hash rate and the computational power being thrown at the network. And those are the primary risk takers. The people who buy and sell Bitcoin are not the primary risk takers. Contrast hash rate and network growth with, let's say, what happens in the oil industry. When oil prices come down, drilling stops, rig count goes down, right? I remember in the 80s when I was on Wall Street, Houston was the see-through city, right? Because the energy prices came down, and so did rigging, so did drilling. But it doesn't matter what the price is. The hash rate keeps going up. It's completely price insensitive. Nobody who's in the business cares what the price is, because they have conviction that everything eventually goes to zero against Bitcoin. And it's happening on a faster and faster timeline. So I don't care what the price is today. I just want as much Bitcoin as I possibly can, because everything is going to zero against Bitcoin. That's conviction. And that's what the people who throw money at the network, who have sunken costs, who are actually throwing cash, raising money and dumping it into the ground to build miners, out in Texas. They have conviction in this industry that has not been seen in any other industry, I don't think. Maybe the 49ers, the gold miners in California in 1849, perhaps you would see a similar phenomenon of highly folks with great conviction. But that industry ultimately leads to a commodity that is not inelastic. Only with Bitcoin is it a finite supply. So it's infinite demand meets absolute scarcity. So you put those two together, and you're going to end up with everything going to zero against it. And the daily price chart is not telling you the information you need to know. Look at these other factors, these other charts, to get a better picture of what's really happening. There's a lot of work coming out psychologically. The idea of absolute scarcity is baked into our DNA and highly desirable. Human beings are programmed to be attracted to something of absolute scarcity. And this means that you've got a proposition of infinite demand on absolute digital scarcity existing entirely outside the control of any entity or any state. Then you put that all together and you end up with a global social, political, economic revolution. And in just 15 years, we've gone from Amir Taki talking about it as swapping thousands of Bitcoin to get a plane ticket to fly to a squat in London to hang out with Peter Todd and write code, to Larry Fink, having FOMO and tripping over his dick to get more Bitcoin. That just took 15 years. I would challenge you to point any time in history like this. In the early days, there are people who got very, very trippy when they went down the rabbit hole of Bitcoin. And because you're one of the first people in history to realize something about separating money from state, and whether you instinctively know this or can articulate it, and that it's a revolution that's happening, and it's hard to express the feelings and the thoughts that are happening in your head. But you can see it in the eyes, and you can see the pinwheel spinning in people's eyes when they talked about Bitcoin, like they were just dropped acid or something. And I remember Charlie Shrem was like this, when we first meet Charlie Shrem. He's somebody who went down that rabbit hole early and understood intimately, explicitly what the future was. And you look in his eyes, and he was like pinwheel spinning. He had seen the future. He had seen the future, and he got it. He's one of those people that just got it, and a lot of people did. When with these people, you had a feeling that they were endowed with supernatural powers, that it could kill them or it could empower them. That was, I think, difference between now and then, is that at the early days, this superpower of Bitcoin, for some people, you didn't know how it was going to turn out. And for a lot of people, it turned out badly. The sponsors of, the Craig Wright characters of the world, right? They actually went insane because of the power of this phenomenal, like kryptonite of money. It drove some people absolutely insane. I think that the Bitcoin singularity is when we can telepathically send sats to each other telepathically. So like, all of your Bitcoin is mine, all of my Bitcoin is yours. And then we live in the Bitcoin singularity because we can telepathically send sats back and forth. So I think that's the Bitcoin singularity. I think that's where we're going. I think that's where Bitcoin as a monetary instrument breaks down. I think it becomes pure spirit at that point, and we enter the kingdom of spiritual awareness.
Bitcoin stands poised at a critical juncture, with multiple indicators suggesting an imminent breakout above $95,000. The current market structure mirrors what Bitcoin maximalists like Max Keiser have long predicted: a perfect storm of institutional adoption, shrinking supply, and technical strength that could propel BTC to new highs. Recent spot Bitcoin ETF inflows tell a compelling story, with 2 consecutive days seeing nearly $2 billion in net inflows, the strongest institutional demand since January 2025. This resurgence comes as exchange reserves hit December 2016 levels, with only 45,000 Bitcoin moving to exchanges daily compared to February's 97,940 Bitcoin peak. Such supply contraction creates ideal conditions for upward price movement, especially when paired with negative funding rates that often precede explosive rallies. Technically, Bitcoin's position above the 200-day SMA $88,690 provides a strong foundation, while the $94,000 to $95,000 zone represents the last major resistance before a potential run at $100,000. Analysts note similar setups in late 2023 and 2024 preceded 80% plus rallies, suggesting history may repeat. What makes this moment particularly significant is how it embodies Bitcoin's core value proposition, a hedge against traditional finance's instability. As exchange deposits decline to historic lows, it reveals growing conviction among holders, exactly the type of hyper-Bitcoinization scenario that Keiser frequently discusses. With institutional players accumulating, retail holding strong, and technicals aligned, all signs point to Bitcoin being on the verge of its next major leap forward. The 95K breakout isn't just about price, it's another step in Bitcoin's inevitable march toward becoming the global monetary standard. As we wrap up, what impact do you think Bitcoin's rise will have on global economic policies in the next decade? Let us know your thoughts in the comments below. Share this video and hit the like button. Thanks for watching, and don't forget to subscribe.